Our market master for the day, Nilesh Shah, MD and CEO of Envision Capital. He has a big smile on his face, so we know the kind of money he's been making in this bull run. Nilesh, hi, good morning. What's the sense you're getting about September? Will it defy the, the proverbial rule where September generally is a down month for global equities?
Well, I think that's quite likely. It's quite possible. I wouldn't rule it out completely, given that global equities have had a tearaway run. And the fact that they've kind of continued to rally without any significant or meaningful correction. So I wouldn't be surprised if September again repeats itself in terms of what the historical kind of perspective has been, that September, October are normally the relatively soft or the weak kind of months. I wouldn't be surprised if that were to happen.
Okay. Well, actually, I really wish Sonia had not started on such a somber note. Let me just flip the emotion, just to stay with the emotion of the moment. We just had Ramdev and Udayan speaking with us, and you perhaps heard part of the conversation. Udayan was calling for an easy 9,000 by the budget, and Ramdev was saying that he wouldn't be surprised even with 10,000. Just give us an idea. I mean, 6 months down the line, perhaps more policy decisions will be announced now. After all, in the first 100 days, the government had hardly any time. Can there be some, trailblazing move from now up to the budget?
Well, I think if there's some kind of consolidation for the next 1 or 2 months, triggered maybe by kind of consolidation in global equities, then I think that would build a very good foundation for kind of a very, very strong 2015. I actually think that the calendar year 2015 could be extremely good. Because probably that you're going to probably see for the first time a consecutive 3 to 4 quarters of double-digit earnings growth. This is something which we've probably not seen for the last 20-25 quarters, so to say. So it's quite possible that the next 4 quarters from here on could actually mark the cusp of a new growth cycle in terms of corporate earnings. Number one. Number two, you're clearly seeing now an increased intensity of determination as far as the government goes. I think clearly what's on the agenda are many, many big initiatives, be it GST or be it basically in terms of the banking sector reforms or some initiatives on land acquisition. I think these are all going to be incrementally positive. Crude seems to be on the side of India right now, which ensures that at least deficit is going to be capped. You're clearly seeing the finance minister to be a lot more confident in terms of where fiscal deficit is going to be. It's quite possible that the next year, which is 2015 calendar year, you could also see the start of rate cuts, inflation kind of moderating, sobering. So all in all, I probably believe that CY 2015 could be basically first big year where both macros and the micros conjure towards being a lot more benign than what the last 3 to 5 years have been.
Okay. In terms of earnings growth and something that the market is watching very closely, the expectations that we've gotten so far is that in FY15, we could see a 15% Sensex earnings growth and about a 20% in FY16. What are your expectations? Do you think these, figures could be overshot?
I'm not quite sure about the FY15 being kind of 15%. It's quite possible that it could move up from the 7-8% to the 10 to 12% kind of a band for FY15. But I think FY16 is going to be a very, very strong year. I probably believe that that financial year could see a 20% earnings growth. That is very much likely, especially the kind of softness we're seeing in commodity prices, the probability of interest rates beginning to kind of recede or come off. I think these are things which could basically expand margins and therefore expand earnings for corporate India. So I'd probably be more sanguine about FY16 registering a 20% earnings growth versus FY15, which we probably believe would probably be in a best case situation of 10 to 12% earnings growth.
Nilesh, picking up from the cautionary note that Sonia struck, will the caution be introduced by today's Supreme Court judgment, you think? How are you looking up to it, looking forward to it?
Very unlikely. I probably believe that from a market standpoint, the verdict, whichever way it goes, is likely to be relatively non-event. It's something which is known. The kind of stand which the Supreme Court has taken is something now which is very well known. So to that extent, I don't think it's going to be a game changer as far as the markets go.
I mean, an extreme case would be like if, like the 2G case or like they did in Goa and Karnataka, there is a ban effective for some time, or most of the blocks are deallocated. You don't think anything like that would be done?
I think the probability of that is very low, and even if it were to happen, it would essentially ensure that probably we all start back from scratch, but I think it would be on a clean slate. It's something which would be positive going forward, where the government itself then would come out with a very clear-cut policy in terms of how allocation would happen in future. It would probably mark the start towards movement of more of auction of public resources or natural resources. It will lay the foundation for a very strategic policy shift, which I think is going to be very good for the nation, very good for the economy, and hopefully very good for even corporate India.
Okay. I don't know if you heard my colleague Nigel, who was pointing out this rally that we've seen from 6,000 to 8,000. In this 2,000-point move, we've seen a lot of participation coming from the oil and gas space, so BPCL, ONGC, on the hopes of reforms. Is this a space that you would continue to back, or do you think now the baton will be passed elsewhere?
I think it's going to be a very interesting space, the oil and gas pack. That's probably where the potential for policy reform is the highest. Tailwinds are very strong, given that now virtually petrol and diesel are virtually done with, leaving only LPG and kerosene to be kind of, in a way, reforms to be initiated on that side of it. Crude is relatively soft. So all in all, I think that's one sector where probably we could see even a lot more interesting times. Most of the stocks out there have consolidated for very long periods of time. They've consolidated for about 8 to 10 years. They're coming out of a 10-year consolidation. That's something which is brilliant from a market point of view. So I think the oil and gas pack is a very, very interesting pack going forward, even from, a medium to long-term perspective.
Okay. Well, actually, I want to ask you a whole host of mid-cap stocks, but somebody from our money control message board has already begun that. So I'll just toss to that question. Nirav Bhamba from Pune has written to us. He wants to know if this is a good time to buy stocks from the power or energy sector. You spoke about energy in the oil sense, but power sector, would you buy any?
I'd still think that probably it should not be really on the top priority. This is really a sector where things are going to take a lot longer. And I'm not too sure what kind of returns lie from the kind of levels at which most of the power stocks are. So I'm not quite sure. I mean, it really depends on what you're really referring to. Is one referring to power generation pack, or really one is referring to the power equipment pack?
But would you buy any, like grid or, transformers?
No, really not. Because I think clearly segments like transformers, etc., are very low-end segments. These are really segments which do not have any competitive advantage. You really go by bids, you go by tenders, and somebody with the lowest bid essentially walks away with the order, which is really not the best of things to do. If you really look at the power equipment side, look at what the power minister has been saying, is that you honestly, in a way, theoretically, you have enough capacity of projects which are already there. You have 150,000 megawatts of projects there. Even if all the unutilized capacity is utilized, you really don't need any incremental power generation in the short to medium term. So if you really look at it, the priority of the government would be to kind of kickstart existing projects which are on the ground. So I'm not too sure even whether power equipment companies are anything very attractive at this stage. Even if you look at the CEOs of these companies, they're essentially saying nothing great is going to happen in FY15. So in a way, it's a wait and watch kind of a mode. I'd put the sector in a wait and watch mode.
Okay, then separate the wheat from the chaff for us in the mid-cap space. Let me start sectorally. Okay, which of the pharma stocks do you like? What is staring at me from the screen is Aurobindo. The year-to-date gain is 108%. But you tell me, what do you like in that?
I think one would be very careful or cautious on the pharma sector now at this stage. I think this sector has been a terrible outperformer. And I think rightly so. But one has to be now very careful, especially those individual companies which are dependent on a single product. And what really happens is that the tendency is to extrapolate the last 4 quarters performance to the next 4 years, not even the next 4 quarters, but the next 4 years, and saying is that, it's so cheap from that kind of point of view. But we have to keep in mind that these single product wonders are not enduring enough. They do not last very long. And these are stocks which have multiplied over the last 2 or 3 years. So I'd probably think that one has to be very, very careful in the pharma space at this point of time.
Okay, one sector that we missed out on, and I think is one of the most crucial sectors, that has led this rally, is banks. Because if you look at names like Axis, PNB, ICICI, they're all up 60 to 80% since the month of Jan or Feb. What should the approach be now? Should you still stick to private, or now do you think that PSU banks are the way to go?
Probably PSU banks might be good from a 2 to 3 year horizon. I think the next 2 to 3 quarters will still be very challenging for PSU banks. asset quality will be a continuing, lingering concern which would be there. We really don't know what kind of regulatory initiatives which could be taken. You've had some of these PSU banks come under the CBI scanner and things of that kind, and we don't know if a few more of that will come in. But again, the potential to reform in that pack is the highest, especially let's assume that the government somewhere down the line goes and said, we accept the PJ Nayak committee recommendations and we are going ahead with implementing that. I think that would be a huge catalyst for PSU banking space. But till that doesn't happen, I don't think there's any meaningful trigger or a meaningful catalyst for the PSU banking space.
Okay, so you would really wait for decisions to
Absolutely.
So what would it be consumption companies?
I think within the consumption, according to us, real estate is in a very, very interesting space. We think that actually the potential in the real estate sector over the next 2 to 3 years is going to be significant. We think the delta in earnings over the next 2 or 3 years in the real estate space is going to be again very, very significant. Of course, what needs to be underlined is to kind of look at quality, look at companies in the real estate space which have a very lean and a mean balance sheet.
Help us, name names.
And so, for example, a company that we own is a company called Kolte Patil. We own this stock. We think that this is an excellent company. It has been executing very well. It has got a very low debt to equity. I mean, its net debt to equity is 0.1, 0.2 times. It's probably got one of the best credit ratings. A lot of softer issues and intangibles about this company are probably in line. We think it has got an excellent inventory for the next 2 or 3 years. Even in tough times, a lot of good quality real estate companies have been able to kind of have order bookings or area bookings, which I think is very good. Right now, a lot of people are still looking at the real estate space with a lot of caution, and we like that because then that's where really creates the value in terms of the difference between value and price. So I think it's one space where, again, potential for reforms. If you have real estate regulators, I think that's good. A lot of consolidation has already happened in the booking space, where, actual consumers are not going ahead and booking with some local builders or with some of these tier 2, tier 3 builders. So I think consolidation has happened. So the quality guys will have some kind of pricing power going forward. So I think all in all, and it's a good proxy for consumption space also, because as India crosses that $1,000 per capita income mark, clearly a lot of the incremental savings will go into buying homes. So we actually believe that real estate is one interesting space from the next 2 to 3 year perspective.
Okay, well, they have an excellent property called Life Republic. I don't know if you've seen that. I mean, that's like a dream home. But any other mid-cap ideas that you've spotted? Quickly, if you can take us through that.
No, I think we still like the print media space. We like the consumer durable space. We clearly think that the consumer durables presence, and yeah, I think one has to really pick. Maybe those are some of the more expensive side. But I think that's again a very, very interesting space where demand was subdued for the last 2 3 years, and we think that the demand.
What do you like there?
We're still evaluating a few names. Of course, a company that we already own out there is Symphony. That's a company that we own, which is an air cooling company. But we see still evaluating more names out there. We also think that initiatives like the Jan Dhan Yojana, where a lot of people come into the banking system, come into the formal credit system, I think there could be good set of potential incremental consumers coming in for the consumer durable companies as well.
Nilesh, it's been a pleasure having you at a time when the markets, of course, were catching their breath and watching that 8,000 mark. Thank you very much for joining us with your advice.